Hello, welcome to Be the Boss of Your Money. We're just getting started for some exciting stuff. I'm going to give you a quick update on a few things about the. I'm going to give you a quick update on a few things about stimulus, what's going on in Congress, Senator Joe Manchin of West Virginia. There's a whole bunch of things coming up, but the theme today is what's next. We got through that whole political process. Okay, the impeachment. Now that's out of the way, and we're getting back to business of stimulus that's been going around for a long time. What's going to happen with it? We're talking about a $1.9 trillion stimulus. And we're talking about this just as we're seeing some really very strong signs of economic pickup right now. So, do you do the massive stimulus to keep it going? Or do you hold back a little bit on the massive stimulus because you might not really need it as much? This is going to be a big debate, but if anyone's going to win, there's a process called budget reconciliation, and that'll win. So let's get into this. My name is Mitch Goldberg. You're watching Be the Boss of Your Money. Got a couple of things to talk about and an update. So here we go. Thank you so much for joining me. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. We're just getting started. This is one of those days where literally at 4:30 when I do this show every day, I'm like, wow, this day really got by me. So it's hard to put them out, the live stream. It's hard to launch it exactly 4:30 every day. And believe it or not, folks, I'm working all day, and I get to 4:30, I hit the live button and I go. It takes me just a couple of seconds to make the thumbnail announcement on social media, but I'm not saying I'm winging it. I know what I want to talk about, and I prefer to have a conversation with you because it's just better. It's better for me. I'm not a good script reader. I've tried that with making YouTube videos like 10 years ago, 11 years ago when I first started making videos. I tried to script everything out, and I would take these I bought a whole bunch of whiteboards, and it would write my script on what I want to say in all of them, and I'm kind of reading like that, and it just wasn't working. And this was really before all the technology with like cheap teleprompters that a lot of people are using today. But then again, I'm not really great with reading from a teleprompter. I just like to maybe write a couple of bullet points. I look at those, and that just keeps me going. And I'm just more of a conversant kind of person. I don't really think I'm the kind of person who has a lot of trouble finding things to say. Maybe it's because I'm a little bit of an extrovert. Yeah, I'm definitely a social creature. I like to be out. I like to see people. I like to mingle. I like to chat it up with strangers while I'm waiting online at Target, which is a lot of fun, but it often does embarrass the heck out of my teenage kids. But hey, what can I tell you? I'm having fun, and the other parents are having fun. We're talking. So welcome to Be the Boss of Your Money. This is about personal finance. It covers a lot of things: investing, information about taxes, certainly about stimulus that we're all talking about right now. It covers planning, estate planning, so many things about personal finance. And I want this show to be a resource to you so that you can tune in at any given time and learn something new. Thank you very much. You could also check us out in the replays at any time on YouTube. Client First Strategy is my YouTube channel. On Instagram, I am at InstaMitchG, all spelled out, InstaMitchG. I'm on LinkedIn, Mitchell Goldberg, and I am on Facebook, Client First Strategy. Okay, if you do hit me up on my personal Facebook page, I don't mind. Just let me know how you found me. If it's through the show, that's fine. But when just a total stranger hits me up on Facebook, I generally tend to ignore those. Okay, so just want to let you know, I'm not trying to be antisocial in that way. If you have any questions, hit me up in the comments right now. Questions, comments. Yes, questions in the comments. Questions in the comments right now. I love answering your questions. And if you're watching this in the replay, welcome to you as well. And I would love to answer your questions. I think that is the best part. And I really think when you ask me questions, that's when I am providing the most value to you. If you notice, there's a couple of things on the set. I've got the purple accent lighting behind me. I've got camera 1. I now have camera 2. And I even have camera 3, which gives you a little behind the scenes look at things, which I'm really enjoying. I think, camera 3 is not for 20, 30 seconds. That's just like a quick popping in there when I'm answering your question. And then when I really want to get into answering questions, I just, answer your question like that. I'm having so much fun. I love the live streaming. I love teaching. And I love to make this like a really good place to learn for you. Safe place to learn. Okay. So let's talk about a couple of things. Before we get into the market update, there are some things that are super important. Retail sales figures announced today are up over 5% versus the about 1.5% expectations. Folks, retail sales are blistering right now, blistering hot. That is a stunning number to get from retail sales. And we had a much higher than expected inflation number from the Producer's Price Index. The Producer Price Index came out about 1.3. It's the highest monthly figure we've seen in over 10 years. That's a significant rise in inflation. And the narrative has been that inflation is starting to rise. And you see that with the 10-year Treasury going above 1.3% yesterday, a little bit above that today. Closed flat today, but still it's solidly in the ones. 10-year Treasury touched 2%, stayed above 2%. Mortgage rates are going up, and mortgage refis are starting to trend down a little bit. Demand for mortgages is actually off a little because rates are going up a little bit. I really didn't think there was anyone left to refinance. Imagine you refinance your mortgage at 4%. Now you're refinancing it under 3%. It's just incredible numbers. But there are signs that the economy is picking up. And today's retail sales figures were just tremendous numbers. And the Producer Price Index was really big. So we have some really good stats. And the base case here has been that the economy gets stronger, much stronger in the second half of 2021 and possibly brings about a surge of inflation, maybe a surge that is a little bit too much for the Federal Reserve's comfort level. But today, the Fed came out and said in their notes from a few weeks ago that they think the economy is nowhere near healing and the economy has a long way to go, and they're not going to raise interest rates until they see really strong evidence of basically the labor market being as strong as it was before the pandemic started. So if you're thinking about long-term interest rates rising and the Fed keeping short-term rates down, there's really one thing you have to do. You got to buy bank stocks. And you know what? Do you mind if I just put a quick video up here that I spoke to you guys about? I'm just going to put this up really fast. Here we go. Just got to check this out. So financials have learned to cut costs. They have either made money on wealth management. Like Bank of America owns Merrill Lynch, Wells Fargo owns Wells Fargo Advisors, et cetera. So the wealth management business has helped keep these companies afloat. Investment banking, we've had, I think, a record amount of IPOs this year, or at least the most since the bubble, the tech wreck. But the IPOs are a lot bigger. So investment banking is doing extremely well. But now you have trillions of dollars in savings accounts and checking accounts, money markets. Now the banks can make real money on this stuff because the yield curve is steepened. The spread between short-term rates that banks have to pay you and long-term rates that they get paid on has widened. The financials have had a very quick rebound lately because longer-term rates have gone up. Now you might think, well, what about the recession and the economy's not so strong? Banks have benefited greatly from stimulus as well, and it's kept a lot of companies afloat. The Federal Reserve has bought bonds directly from corporations to keep them afloat. So I would say banks happen to be in a very good position. All right. So I put that out a while ago in my live streams. I was talking about bank stocks and energy stocks as catch-up trades, places of value. And I also spoke about in December about pot stocks. So look, all I'm saying is you have to watch the show because I'm giving you nuggets, and every now and then, you catch one of these things and it could help you become maybe a better investor. Maybe it could help you make a little more money, right? I'm more concerned about helping you become a better investor than making money right now. I'm not here to give you a quick stock trade. I'm here to help you think for yourself, right? So anyway, the point is the yield curve is getting really, really steep. It became inverted even before the pandemic started. And now it's steepening. And that is a real strong sign of confidence in the economy. But these statistics, you hear about yield curve and inflation, rising interest rates, but these are being corroborated with real economic statistics. Hard numbers are telling you that the economy is going up. So we have a base case that the economy really accelerates into 2021, sparks some inflation. Is that inflation viewed transitory by the Fed, so the Fed's not going to counter that? Or is inflation so high that the Fed blinks and says, we've got to tighten, and that kind of maybe ends the bull market? The Fed reiterate constantly that they're keeping rates low. And now that we're talking about the economy picking up in the second half of 2021, I think we now maybe have to start talking about the economy, notwithstanding the ice disasters happening in Texas and a lot of the Midwest of this country, the weather events. But I think you have to start thinking that economic activity is picking up ahead of schedule. And I don't think investors are really knowing what to do about that, which is why markets were kind of flattish today. The NASDAQ was down. The only reason the Dow is up, really, if you think about it, it's because Warren Buffett announced he took big stakes in two Dow components, Chevron and Verizon. Had it not been for those two stocks, we wouldn't have had such a great day. But let's take a look. We'll do a share screen. Okay. Let's see how that works. That should not be a black screen. All right. I don't know why that's a black screen unless doing the wrong screen here. Okay. So we'll forget that one. I have another way to go about this. Okay. We'll do share screen. Share screen. All right, here we go. So you see, winner of the day, energy, discretionary, financials. Overall, not a bad day. Almost everything was up today. I mean, building materials and industrials are off a tiny bit. Technology was off a little bit. But these sectors have had really, really big runs. And you take a look at the day, the Dow was up 90. The S&P was off only a little over 1.25. Big deal. NASDAQ was off 82. It was off about 1% most of the day. So that recovered a little bit toward the end of the day. Russell 2000, you can see that down 16.78. That's small cap stocks, but the Russell 2000 has been up a lot. That's been performing incredibly well. So a little give back doesn't really concern me. And the VIX remains in the low 20s. We talk about that, under 30, under 25. It did go under 20 for like a minute yesterday. And I've been saying that if we could see that stay under 20, that could bring in a whole new rush of buyers. They're called algorithm buyers. It just sends off a signal to computerized trading, and then the computers go to work and they start buying. We just can't get the VIX under 20. So there's always this low level of worry that's built into the market. Okay, so let's do the stop screen share, stop sharing. All right, we're back. Okay, so I'm going to do a couple of quick things, and this is the heart of the matter. By the way, folks, questions, please. Comments. As the YouTubers say, comment below. Okay. By the way, if you're watching this on YouTube and you can't comment on YouTube, There's a reason for that. I'm not actually, I disable the comments on YouTube for regulatory purposes. They can't be captured and stored electronically at this point with the compliance and broker-dealer and RA services that I use. So that's like the inside language. The bottom line is, if you want to comment on LinkedIn or Facebook, or just follow me on Instagram. You can reach me there too. I just can't comment, and I accept comments and reply. I can't reply to you on YouTube. So I don't mean to be rude. It's just something I have to do. It's not something I want to do. I would love to get involved in comments on YouTube. That would probably help me grow my YouTube channel a lot. Let's take a quick look at a couple of things here. Okay. So we went over the retail sales. We went over the producer price index came out a little bit better than expected. Okay, so here's a couple of things I want to talk to you about. Stimulus. Probably next week, I would think Tuesday or Wednesday next week, we expect the House to pass the $1.9 trillion stimulus package. About a week after that, maybe 2 weeks after that, so we're getting into, let's say first or second week of March, the Senate votes on it. All right. And you just need a simple majority. So the Democrats can't lose. They can't lose one single Democratic senator vote. All 50 senators who are Democrats have to vote. I think it's fair to say that all 50 Republican senators will vote nay. So you have a tie, but the vice president gets to break the tie, Kamala Harris, and you push this through. Most of the public, most of the United States wants this package. I mean, think about it. The $600 plus from the last stimulus plus the $1,400, it's $2,000. So a family of four with a net income, AGI, 150,000 or under, will get $8,000, providing they have, two children, right? Family of four, children under a certain age, okay, who are dependents. That is a lot of money to be throwing at families. And what do you think is going to happen to that money? Well, yes, some of it will get saved. I wonder how much of that money is going to go into Robinhood accounts and other accounts. But a lot of that is going to go toward bills, necessities. But those are bills. That's part of the economy. But a lot of it's going to go into discretionary spending. So if you think retail sales over 5% this month, year over year, were solid, wait till you see what they could do over the next couple of months. I would expect the stimulus checks to go out at the earliest first week of April. If you didn't file your 2020 tax return yet, and because you could either go by your 2020 tax return or 2019 tax return, but if you didn't file your 2020 tax return yet, and you made over 150, especially a couple filing jointly made over 200,000, you're eliminated because there's a hard cutoff at 100,000 for an individual. You're not getting any stimulus check, and 200,000 for joint filers. And it's something like, I think it's 125 or it's 100,000. It's 125 hard cutoff for head of household. Okay. So they start. So if you're single, you make 75,000 or more, you start getting cut back at how much stimulus you get until you hit 100, then you get nothing. 150 for a couple, 200, they get cut off completely. 100 for head of household, they get cut off at 125. These are the numbers. All right. So, but if your 2019 tax return doesn't qualify you to get the stimulus, then, and your 2020 income is a lot lower, then it behooves you to file your tax return as quickly as possible. And if your tax return for 2020 is higher and you had a better year in 2020 and that kind of knocked you out of the box, then you might want to wait. Consult with your tax advisor. I'm not a tax advisor, okay? But this is everything I've read and researched, and I've read and researched a lot about this, and I'm up to date on the latest. If we don't get the stimulus package through, not only do I think a lot of Americans, the majority of Americans, are going to be disappointed, but I think you also have to take a look what happens to the stock market, because this is really factored into the stock market. You ask any stock professional, any professional investor, they always say, we have a lot of things going for us in 2021, like stimulus and infrastructure spending. If you start taking these things away, then all of a sudden the underpinnings of expectations start to get pulled out from under you, right? If you don't get the stimulus, because in the stimulus package, there's money for schools. There's money for, I've got all my notes here, extra EIDL money. Unemployment aid is continued. Housing aid is continued. All of these things. $15 minimum wage looks like Biden still wants it, but I think if there's any sacrificial lamb in there, I think he wants a $15 minimum wage by like 2024, 2025. If there's anything to be sacrificed, that probably would be it. He also says, Biden says he doesn't really have the authority to push through $50,000 of student loan forgiveness. I think he's thinking in terms of maybe he could work with $10,000 per student, but giving everyone with student loans that kind of money is just it's a lot. Look, if you have student loan debt, don't be mad at me. I'm not in Congress here. Okay, I'm just letting you know that Biden said that's a little too much. 50,000 is more than a little too much than he could bite off there. Okay. We also want to see housing. What we have now is the moratorium, where say mortgage forbearance is extended for another 3 months. But you have to have a mortgage through Fannie Mae or Freddie Mac. It's very simple to find out. You call your mortgage servicer who you pay your bill to and just say, hey, is that a Freddie or Fannie mortgage? And you're entitled to for another 3 months of forbearance. And when you pay it back, because you're going to have to pay that money back, but you don't have to pay it back all at once. It'll be added on over time. It'll be amortized into your mortgage into the future. So these are the things that everyone is riding on. So just if somebody wants to know about tax credits, people are asking about the child tax credits. The child tax credits that Biden would like to see, that the Democrats want, is $3,500 per child 6 and under, and then $3,000 per child over 6. But that's a 2021 thing. That has nothing to do with 2020. 2020, it's still $2,000 per child tax credit. Okay. Sometimes, some people have asked me about that. So that's what's on the plate for today. I thank you for watching. We got a little bit into the weeds here with some stuff, and I love doing that. But I really want to make sure we focus on personal finance, not just about the stock market every single day. That's a big part of it, and that's, to me, the most exciting part of it. But we've got other things to talk about. Thank you very much. Jay, I see you out there. Thank you. And I will speak to you guys tomorrow. Looking forward to it.